Good morning, everyone. Good morning. We're going to get started here in just a minute. Quickly get a couple more things set up here. Alrighty. Here we go. All right. How's everyone doing this morning? Finally passed the election, and we've obviously got a big risk-on move this morning. So good morning. If you're here for the first time, this is our morning show. It's called Set the Market. We specialize, if you will, sort of focusing on 10 to 15 minutes of what we think are some of the most important things to look at. No BS, no useless conversations, really just trying to get right to the point because we know everyone's time is valuable. I want to honor your time, and I certainly want to honor my own time as well for my sake, for my family's sake, and for our client's sake, of course. So let's get started here this morning. What we look at this morning when we look at the equity market first, I want to go equity market first a little bit, and then I want to get yields. That's point number 2. And 3, I really want to have a look at Tesla. And there's something interesting here that I think is it meets sort of the logic of the naked eye. So first of all, let's just look at the equity market. We're going to look at very, very simplistic US-centric analysis. And what we're looking at here is essentially the S&P 500 E-mini futures contract. And what we're seeing here is a move that had the futures within 50 points or less even, I think, of 6,000. We're now backing off a touch, but we're still now, 80 points or 70 points from 6,000 on the futures. That seems to be a very logical sort of target to get to. I think what's more questionable is what happens afterwards. The upper end, and I told you this was simple, right? So the upper end of that resistance line gets us, and this resistance line has been in place since for the past 2 years. So it's almost exactly 2 years old, if you will. It comes in around 6,200, and that's also where some of the larger Wall Street firms, like a Goldman, for example, think has a 6,200 year-end target. I guess the question is what happens after that. And so there's a couple things that could happen here. We could either, rally this morning to 6,000 or even all the way to 6,200 over the course of a number of days. And then I guess the question is then what, right? Is everything then baked in and then we're just going to trot sideways to lower for the rest of the year? That could cause a lot of pain. Because remember, even 6,200 from like these levels right now, that's not far. That's like, less than 5%. Like Russell futures, I think, are up like 5 or 6% this morning in one day. So, so that's the trick. If the higher we go, the quicker we go, the more I think we're borrowing from potential year-end rallies. That's the tricky part. If for some reason we were to give up some of today's gains, and I say some, like a lot of it, that could put us on a completely different trajectory. Because if we were to give up today's gains, and again, this is all big ifs, we want to be open to everything. That's the really important thing here. That could potentially make another lower high, and then, the downside would once again open to some extent. In other words, on that second point, is it possible that we get a sort of a sell the news reaction now that the initial reaction's out? It's possible. I really am I'm giving it a 50-50 chance. I do not know, but I do think it's something we need to be open-minded to, because at some point all the good news gets baked in, and I don't know where that is. It might be higher from here. In fact, I'm tending to think it's a bit higher from here, but I don't know. I want to be open-minded, and I hope that's adding value to be open-minded, because I know a lot of people that I get a lot of comments here and there, and I notice a lot of people, despite our suggesting to be open-minded, are really not open-minded. They're very, very, stuck to their to their political views, saying, oh, it's going to do this or that based on this or that outcome. And that's one of the more dangerous stance posture to have. So that's just quickly on the broader U.S. equity market. Now, where it gets really interesting before we start looking at Tesla is we have to bring up 10-year yields. And we've been saying this now for some time. This morning, 10-year bond yields are up another 18 basis points, so 0.18%. We were almost at 5%, or we were at 5%, a few hours ago, backing off a little bit. If we break above and hold above 4.5%, I think at some point the equity market's not going to like that too much. But at this point, this initial reaction to this very clear election outcome, at least, as someone who has to trust the news, of course, on this, it's a red sweep, quite simple, popular votes, Senate, House, presidents, the whole thing. I think there's a lot of momentum here, and I really want to pick my spots here, and not go against this unless we have a really clear trade. In fact, we're doing a webinar that you guys can also get invited to if you'd like at 10 o'clock, so in 50 minutes or so. And we're going to go through and see if there's a trade to do here this morning in the equity market, equity futures, and maybe some individual stocks. So I would keep an open mind. Remember, there's a lot of animal spirits here, some pent-up demand on the buying side as well. This is mostly all algorithmically driven, this rally up. The entire rally overnight was mostly a one-way road as of, I think, 7:30 Eastern last night. This is the E-mini S&P 500 contract, and we'll talk about this at 10 o'clock this morning. It's really a one-way street, and we pretty much got, essentially 3 buy signals, and we were now where we are. So that's as much as that goes. Now, the main thing I want to spend a couple of minutes on right now is Tesla as an individual stock. And I was, in our morning call this morning, I was telling JB that I've actually never really owned Tesla. I don't own it like as an individual stock. I never have. I don't think I did more than maybe 2 trades on it, or maybe 3 over the course of my life, or over the course of the company's, as a publicly traded company, for one very simple reason. Just the fact that it's almost like it's a cult stock. And cult stocks to me have unpredictable volatility. And I just find better opportunities. It's as simple as that. That is not an indictment against or some judgment against the company, Tesla, or its founder or anything. It has zero to do with that. Just it's got unpredictable volatility that I just don't need in my life. The markets are volatile enough. I don't need that in my life. However, it's possible that things have now shifted a little bit more into a directional movement here for Tesla, in my view. And the reason, I'll give you the chart here in a second, or you can look at it right now, actually. But the reason on Tesla is really more with the sort of the deregulation point. And obviously, we know that Musk may be taking part of the government and so on and so forth. And so I think there's probably more sort of, there's more room for predictable volatility or less crazy volatility going forward. So the stock's doing well up this morning. It's I think it's still up about 12 to 15% at this morning. So let's get to the chart. And I realize that every time we talk about it, and this is already to me and be completely already a warning sign. The fact that I'm not sure if I've ever seen more than a couple comments in a row. The fact that everyone's now commenting on this kind of a thing is already kind of scary. But here's the chart. So this is the company essentially, if you want to look at it from a technical perspective, over the course of the past couple of years, past 3 years actually specifically. And it's a really simple pattern. It's just, you can call it a huge inverse head and shoulders pattern. There's actually 2 of them. I drew 2 of them in here, but you can make one big one. But I think given the tailwinds here of deregulation, better infrastructure build out now on the electricity front, which is one of my big themes. I just had a breakfast meeting this morning with someone talking about the whole build out of more nuclear power and stuff like that. And again, we've talked about this now for several months, which we think is a huge tailwind. All of that could actually help. Robo-taxis, all that stuff needs electricity, and of course many other things do as well. Not going to go into too much here today right now. But I would look at this stock and I would say to myself, I am saying to myself, that this might be now, for me personally, the first time that this stock has the ability to start moving higher in a somewhat more, I hate to say the word predictable, I don't want to, so I'm not going to say it, but in a somewhat more stair-step manner that has structural tailwinds also from a deregulatory perspective behind it. And I like that. So this morning right now, the stock's trading around 280, was trading as high as 290 pre-market, and so if we were to kind of mark where that is on the chart, so let me show you that real quick. So, let's call it 280 is more or less here. So either way, 280 or 290 is a breakout. And one can go long here as a consideration, call spreads. I would usually do something like this more with a bull put spread to start and kind of feel it out and then see if it's trailable. But ultimately, and this is not really the business that I want to be in for this morning show, but ultimately, if this pattern were to play out, and that's a big if still, and it's not the point, this is more of a, first let's start with a trade. But if you were to start very simple, and this is overly simplistic, you would have to look at a move that could get this stock, just from this simple measurement perspective alone, somewhere closer to $900 over the course of time. Again, that's obviously a much longer time horizon, if it ever even happens, but it's something that, if a lot of these things start to click, could make sense. And don't forget, Tesla did more or less nothing from 2014 to 2019. That's 5 years. That's this. And then it went bananas between 2019 and, let's call it, a good part of 21. And it's now been going sideways for 3 years. So can it go sideways longer after a breakout, fake out, go right back? Yes. But I think what's different here, in my view, is the deregulatory tailwinds that could open up things and take some of the blockages away that were before, from my understanding, a bit in the way. So that's one thing I'm looking at here, and hopefully this is adding some value to you guys here this morning. Now, we're going to meet at 10 o'clock Eastern, so that's in 45 minutes over in one of our GoToWebinar rooms. If you want to join us for that, you can email support@thesteadytrader.com. And they will send you a link. It's support@thesteadytrader.com. And what we're going to do is we're going to see if there's a trade. We'll be using our tools, for example, the TST Trender, and see if we might have a trade set up. We're actually now, just over the past hour or so, we got a new, or even less, got a new sell signal. It's very shy, and again, it's too early to tell. But that's something what we'll be doing. Silver, and I'm sorry, I'm just seeing this message from Mason. Silver, look, silver and gold are going to feel some pressure here today because what you're seeing is a big rally in the dollar. Okay, let's end on this part. So silver futures this morning down 5%. The dollar's rallying hard. So to kind of give you an idea of this, and there's a very logical reason for why silver would go down in this. So this is the dollar here, the purple line. And it goes up, and all else being equal, in a strong move like that for the dollar to the upside, you're going to see things priced in dollar, like commodities in this case, go down. Maybe there's some other reason for it, but that's the way I look at it. Does that change my underlying thesis for silver and gold going forward? No, it really doesn't. I think all it is a pause here, and again, a lot of animal spirits kind of, doing their thing here this morning, so you can expect some volatility remember, we haven't seen any volatility. We're now seeing upside volatility, right? But we haven't seen any real up and down big and up big and down big. So that we haven't seen. Maybe today's the day for that. I don't know. I don't care. I'll be open for it. But that's what I'm seeing here right now. So if you guys want to join us in 45 minutes from now, then you can just email support@thesteadytrader.com, and then we'll see you there for a live trading session. AMR Dave is asking, how do you think bonds will react? What's the time? I don't know what the time frame is in that, AMR, but I think yields are going to continue to go higher. That's not a view for the next 2 days, but I think the 10-year yield is probably going to settle over the course of a while. It's probably going to get a little bit less volatile, I would imagine, at some point. But I think it's between 4.2 and 5 is a fair range, and at some point you could see equities start to not like that too much. But right now, this morning, a lot of animal spirits for obvious reasons, right? We have an absolute red sweep, and so that makes sense. But again, I would say it's possible that we have a sweep. I think it's possible that we have we need to be open-minded, I should say. Sorry, just had a blank out there. It's been a long day already. Possible for all be open to all possibilities today, I think is the point. So, cool. Thank you all for joining, folks, and we'll see you again here tomorrow. Also, I think all these messages on LRHC, that's a lot of spam, so we're going to mark all those people and report them, just as an FYI. If you guys are seeing this LRHC thing, all these messages, we're going to report all of them immediately. See you guys tomorrow. Also, please give us a thumbs up, Please subscribe to the channel, very important. That way you're updated in real time when we do these shows in the morning. And of course, when we have new podcasts and everything else live. See you guys tomorrow.